What's up, guys? It's May 21st, 2025. Had an interesting day, I thought this was kind of a nice rally, but then it ended up being a buy vacuum into the EMA. Big reversal, and bears get more than 1 R of the opening. They get about 1 R and then a leg two down here. It's a pretty cool day. I think the daily chart was hinting this was going to happen for a while because of the leg count. The leg count is we are in the third leg, and we're in a third leg. So it was a nested third leg. I want to give a quick shout out to all the subscribers and members. I appreciate you guys always subscribing and tuning in. Have some cool stuff lined up for you guys this weekend and going forward. This weekend I'll be dropping the breakouts video for the members and talking about how breakouts move the markets and just getting a more intimate feel for why breakouts are important. It's the start of the market cycle, and we talk about breakouts every day. So the majority of everyone watching the video, you're in the Discord and you guys trade breakouts, so it's good to just always study the basics. The basics never get old. Okay, yeah, so speaking of breakouts, breaking out of the swing here, leg one, pull back, leg two, pull back, leg three. So there's one third leg. You could say breaking out the EMA, you could start from down here, leg one, pull back, leg two, pull back, leg three. There's a second third leg. So there's 3 legs there, and there's a nested 3 legs. Bad follow through and range highs. There's a high one right here. A high one in the third leg is generally a better fade. So what does that mean? It means the bulls that bought this bar, whether you buy the high or you buy the pullback right around here, they weren't actually able to make 1R. It came very close, but today's bar made 1R. So bears that shorted the high here got a little bit more than 1R. So that's a high one in the third leg, right? Or this bar right here. Depending on how you want to count, there was a pullback and a rally. So there is a hidden high one within this bar. But we'll just talk about the chart we're looking at, and this could be a high one. Leg one, pullback, leg two, pullback, leg three. So after the pullback, this is the new high. That creates the high one. It's a better fade in the third leg trading range behavior. I think today's bar is strong enough to get a second leg down, and that could come in the form of a tail. So what do I mean? That could sell off and rally, or this could be a failed breakout. We are trading, let's get this tool. What's today's high? So we made it all the way back up to this range lows, which is a breakout point. Bulls, I talk about this on the 5-minute a lot. A support and resistance flip. This is acting before, pretend these bars aren't down here. So this is a trading range. We have bull bars above the EMA. Market comes down, and you can see bulls are trying to buy. There's a tail right here. There's a tail right here. Tail, 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 tail. So bulls are buying. This is a swing low. They're buying. Bears get the breakout. Bulls cover themselves, get out at break even. When they sell out of their losing long position, bears sell the second leg, and that creates enough momentum for a second leg down. And in this case, we got a very big second leg down. We vacuumed up to the support, bull resistance, and we sold off. Bulls traded above it by a couple of ticks and sold off. I'm gonna delete this. When the market turns around, it takes a lot of momentum to turn a trend around, and the 15-minute chart kind of shows us how that's happening. So we have a big leg up, breakout, starts the new 3 legs higher, pull back, leg 2, pull back, leg 3. Look at this. So this is a steep breakout and a steep trend. Then it pulls back, gets a little bit more flatter, and here it starts to get way more flatter, and eventually bears get the breakout. Bears target is going to be here. It could argue that it's also here. This target lines up with the EMA, so that could be the first target. Well, the first target's going to be down here, then here, then they're going to go for each swing. Slowly, I'm going to change this to the daily and weekly chart. I think it's just going to give us a little more context. Pretty interesting spot on the weekly chart. I'm going to delete the EMA for the weekly chart, though. Pretty interesting spot. Actually, let me turn this on the weekly length time frame. Weekly. Okay, cool. So, had multiple legs higher since October 23rd-ish. leg 1, strong to get second leg up, pull back leg 2. This whole structure strong to get second leg up, pull back leg 2. 3 legs, leg 1, pull back leg 2, pull back leg 3. Deep pullback, almost testing the breakout point here, and then it rallies for 3 more legs, leg 1, pull back leg 2, pull back leg 3. Then bears get a lower high. That's good for the bears, bad for the bulls. Bulls wanted a new high. Sells off, bouncing right around the breakout point. That's usually the first target for the bears. So gets to the breakout point, and now we're in that rally up. What's interesting now, so you guys saw how the market reacted at this breakout point. Now the market's reacting to the bear breakdown, which was right around here. Or excuse me, it was right around here. So right here is right here. Right here is right here. So it'll be interesting to see what happens. Definitely in a sideways market. Big up, big down. Pretty interesting times. Okay. Daily chart, or 5-minute chart. Gap down, bar 1, bull bar closing on its high. But has a tail. This big of a gap down, bears want bar 1 to be nothing more than a pullback. And then we see bar 2, it's a bull bar closing on its high. It's an inside bar, not breaking far past bar 1. This is breakout mode. It's a form of a triangle. Then we see bar 3 start to break out of the range here, break out of the triangle. Bar 3 is more of a chain range bar, but it has a bull body. And then we see bar 4, bull bar closing on its high. Bad follow through, or not the worst follow through, but it's just a 1 tick above bar 4's body, and it has more tail. Bar 6 becomes that first pullback, and bulls want to buy that. We see a big rally, climactic bar on 7, closes below its midpoint, so bears are sitting at the EMA, and then bears get 3 legs down. These 3 legs down also act as a pullback. So the bear channel starts here, leg 1, pullback, leg 2, pullback, leg 3. Bad follow through on 7. Bar 8, inside bar broke out, inside bar broke out. I think if you're in a position during an inside bar, unless the momentum is clear, it's okay to get out. I don't think bar 8's momentum was clear. So what I mean by that is if you're long, it's okay to get out. And if you're short, wait for more information. Then we see bar 9, bear bar closing on its low. If you took that short, it took 5 minutes to print this bar, and it took 10-minute pullback. So it's not the strongest. Second leg down, bar 12 closing on its low. Fractal pullback. And then 13 being a leg 3 closing on its low. Leg 1, pullback, leg 2, pullback, leg 3. Or if you just want to count the bars we're looking at, leg 1, pullback, leg 2, pullback, leg 3. Bar 14, bull bar closing on its high. If you're looking for a bear trend, this is damaging. Bar 15, interesting bar because it has a tail. So it rallied, trapping bulls here. The bulls that wanted to buy the high at 14 because it's a bull bar closing on its high, so they think it's a good buy, high or low, and they're hoping for a rally. Instead, what happens is 15 trades above them, it fills them, and then reverses down. They're in a losing position. They're going to buy more here, and we can see that on 14, sold off, and then rallied. This gives the bulls the opportunity that bought here to get out at either break even or hold for a swing. The bulls that hold for a swing become the first set of traders within a leg 2 trade. There's 3 types of traders that are looking for a leg 2. It's the traders who buy early, so these bulls here. Then it's the traders who are trapped. So these limit order bears here have a swing. They have a swing right around here because that's where the gap's at. So they have a limit order set there. When I say they have a swing, I mean like there's a swing low here, and it doesn't make a new low, so it's not a very strong swing. But you can see there's a gap, so bears are getting trapped. Bears buy back shorts, so bulls are buying the lows. Bears are buying back shorts. Then we have a small pullback 19. Bulls buy that looking for a second leg 1, pullback leg 2, pullback 3. Those are the traders within a leg 2, and why it's a highly probable trade. 3 types of traders doing the same thing, maybe all for different reasons, but regardless of what their reason is they're hitting the buy. When bears close out a position, it buys back their shorts. So bar 20, bull bar closing on its high, follow through 22. Now we have 2 gaps. Gap here and a gap here. So we know bears are getting trapped. And look where the gaps line up. Around the bar 12 swing and around the high of bar 7. So gaps line up around support and resistance. 22. I'm indifferent about 22 because it is the first reversal, and 23 does lead to a second leg. Leg 1, pull back, leg 2. It's short-lived because we're right under resistance. Bears had a sell-off, pull back, leg 2 today. So leg 1, pull back, leg 2. Puts us into a trading range after this leg because there's a gap down and a rally. And now we're trading around the swing from yesterday. And that gives a big leg down. Don't know why that happens, but you could say leg 1. I don't know why that's happening. Leg 1, pull back, leg 2. You guys see how? I hope you guys can start to see this rotation. Starting to make sense to you. Let me know if you need more explanation. Let me know. Join the Discord if you have any questions and ask me there, and I'll drop some charts, or we can talk back and forth about a specific chart. Rally 23, rally 23, bull bar closing on its high. 24, bear bar closing on its low. 2-bar reversal right under the resistance. I think it's okay to get out on longs here. 25, bad follow through, trading range bar. 26, trading range bar. Just 3 legs down. I'm going to try and speed this up a little bit because I don't want to go past 20 minutes. Leg 1, pull back leg 2, pull back leg 3. Wedge bottom in a, I don't want to say bull regime because we're under the EMA, but we're trading above the 5-minute EMA, so there is some bullish pressure, but we are in a bear regime and bull setups tend to fail. 3 pushes down, leg 1, pull back leg 2, pull back leg 3. You can buy the wedge bottom for a quick scalp, leg 1, pull back leg 2, creates a double top, and the market gets pinned. We're going sideways now. 30, bear bar closing on its low. Not a traditional 2-bar reversal because it's not closing below 29's low. 31, small bull bar, becoming a pullback. It's a tough buy. You're buying at the high of a trading range. I mean the trading range of 31, and you're very close to buying the high of this trading range. So it's a tough buy. You're going to buy it. I think you have to be quick to get out. We see 33, 34, and 35. In this situation, you did have time to average in and get out at break even or for a quick point on bar 40. I think it's skeptical if you're doing that. It's okay to just hit out and take a small loss. Bar 41. It's a very small bear bar, closing at highs after bulls have had 3 legs higher. Closing on its low around the range highs after bulls have had 3 legs higher. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Leg 1, pull back, leg 2, pull back, leg 3. And look at bars 36 through 40. Leg 1, pull back, leg 2, trading range behavior, second leg trap. The reason I think 41 is interesting is because it's very small. This is one of those rare moments where you could take a short here, put a stop here, and you get like 30 times your risk. These type of trades don't happen often. Very good example of bears or traders who are trying to front run a breakout. The first set of traders in the leg 2. So this bar 41 bears can be compared to the bulls on bar 16 that are front running this breakout. Bar 42, bear bar closing on its low, good follow through. I'm gonna draw gaps for these bears because I want you guys to see how the gaps are lining up to support the support levels on the left. Bar 42, 43 create a gap. There is a bull leg within the 43 low, but it rallies and sells off again, creating another gap with bar 45. 44, 45, 46. Bears are continually shorting the market, and it's not becoming too climactic. These are all about average size bars, nothing too crazy. So they can keep their risk relatively short. They get short here, put a stop above it, and they look for the front running the breakout. Then we see 40, 46. Now we have some climactic price action. The problem with 46 is that we're in a trading range. So although this is climactic, we're breaking out of trading range, the market cycle is resetting. 46, 47, 48. Give me 1 second here, guys. 46, 47, 48. Produce another gap. This gap, I'm sure there's a support somewhere to the left. I don't like looking left, but just for this talk, I'm looking left. So the breakout point right here, because gaps line up with support and resistance. So stop order traders are making money, but they have to take profits sometime because their risk is getting too large. And then look at 48, 49. Sells off and rallies. Bears that short down here are confident that they're going to get a leg too. So instead of panicking, they're going to short higher. And then we see bar 50, big bull bar closing on its high. It's not that big in relative to the breakout. It is big compared to these bars, but to this breakout, we're still in the lower half of the range. I mean, I think we're in the like 25%. Oh. So it is a, if I can get these things, where's the, oh, do something here. Okay. So this is the leg from here to down there. Bulls didn't get back to the 50% level. The bulls that bought here and bought here never got out break even. They're going to sell out 51. Bear bar closing on slow. This is the start to the second leg. At the time, do we know that? No, because bar 49 and bar 50 do look strong to get second leg into the EMA, but ultimately there's too many bears shorting the market right now. Bar 52, it's a trading range bar, but it has a bull body, so not the best. Bar 53, bear bar, again, trading range body. Same thing with 54, trading range. Then we see 55, bear bar closing on slow. Reversal for the bulls. 2 bar reversal for the bulls, bar 56. If you're looking to buy this, context is not lining up. There's a lot of momentum. There's a lot of gaps open. Bulls didn't create a gap between these 3 bars. So if you're looking to buy this for a reversal up, I see what you're saying, but it's best to stick with the momentum. And the momentum at this moment, bear regime below the EMA. Many bear bars closing on their low below the EMA and gaps open. So let's just stick to the momentum, and 56 becomes nothing more than a pullback. 57, now we have a 3 bar reversal. Short, reverse, up higher, 56, and then bears 57 reverse that. 3 bear bars, 50, 58 and 59. Both have more tail, so it's trading range behavior. We're going more sideways for the moment, and we can see that with a deep pullback 60 and 61. This is a deep pullback because it's testing the high at 57. Bulls are trying to buy this, hoping for bears have had 3 legs down. Leg 1, pullback, leg 2, pullback. Excuse me. Leg 1, pullback, leg 2, pullback, leg 3. And they're hoping this is the start of a rally. Something like yesterday. Sold off and then rallied. This is what they're looking for, but context has shifted. Yesterday, the majority of the bars were above the EMA. Majority of the bars all above the EMA the prior days. And then we get good bear bars closing below, and we switch into a trading range right below a bear regime. Something I want to talk about, it just popped into my head. So price action is fractal. Look, a trading range, a doji. See this doji right here? Just the individual bar. Let it take away the context. See this doji right here? It's trading on the EMA, and it has bear pressure. So there's a moment in the trend book where Al talks about trading ranges under the EMA typically have a bearish breakout, trading ranges above the EMA typically have a bullish breakout. So this specific bar, any one of these bars, we'll talk about 55. 55 is a trading range bar under the EMA with bearish momentum, okay? So keep this conversation in your head. Now, and then it had a downside breakout. Look at the bars. Now look at this. This price action right here to right here, is a type of a doji. I don't know. We can figure out the time frame. Let me change the opacity. Okay, 45 minute. Maybe we'll go a little bit higher. Let's go to the 4-hour chart. Okay, there's the. I want to go. There's the bar, but I want to go more maybe to the 2-hour chart. There. Okay, that's what I was looking for. It's a trading range under the EMA that breaks out. So back to the 5-minute chart. This trading range is an example of this doji. Where we were talking about 55. Bearish momentum, bullet in a box, momentum shoots down, pullback, breaks out. Same situation. Momentum shoots down, pulls back, shoots out. So I hope I'm explaining this okay. I didn't just confuse you guys. This bar on a smaller time frame. So now we can go to this bar right here on the 1 minute, and it'll look similar to this trading range. Where is it? Where are you? See how it has legs up, legs down, leg up, leg down, and then it shoots out? Now we go back to the 5 minute. leg up, leg down, leg up, leg down, and it shoots out. That's pretty interesting to think about. That this price. What I'm trying to get at is this price action is a doji on a different time frame under the EMA. So bullet in a box mentality. Shoot down here. Momentum's bearish. Shoots out. They get the breakout. Price action is fractal. I think it's important that people can start to see that. And then I'm going to speed this up because we went past the 20-minute mark. I still have to go over the trades. So 64, bear bar closing on its low. Good fall through 65 and 66. 3 bear bars in a row, bear momentum. We're going to short here. I understand how this is a hard short because you're right around the swing low. In this game, we've had multiple legs lower. But in this case, it breaks out 68. Immediate pullback 69. It's a deep pullback testing the breakout point on 67. These are 3 legs lower. 3 bars lower, 70, 71, 72. Then we get a deeper pullback testing the low of this range that leads to a leg down. So let's just go over the trades really quick. And I hope if you guys didn't understand that fractal snippet, please let me know, because it's not gonna make or break your bank, but it's just gonna add that extra context to what you're looking at, and you can start to just put your imagination together. If you see this trading range, you think, oh, trading range under the EMA has a better chance of breaking out to the downside because we've been in a broad bear trend since the 19th bar 49. Call it whatever you want. So think about that. Trading range. This is a triangle. Breaks out. It gets 1-to-1 with bar 7. They're taking profits. I think it even almost gets 1-to-1 with bar 3 bar breakout. If you want to do the leg, here's the leg. Put it below bar 6. Doesn't get 1-to-1 unless you sit to the pullback. So here's the trading range. Or you could just say from the top of the bull bar, actually. Or excuse me, bear bar. 1-to-1. Is that met? Hold on. It's not really met. So if you go for this trading range, it's not necessarily met. I'm going to go for these 2 bars, breakout above the EMA. Okay. Put it right around here. You can start to see the bulls are not really meeting their target. So now we know something's kind of wrong with the bull case, because if we were in a bull trend, bulls would be hitting every target. Trading range down here from the 26 low to the 40 high. 1-to-1's met quickly. I would just take this whole trading range. And you can see how that 1-to-1 was met within 3 to 4 bars from here down here. I mean, we can just eyeball that the leg 2 for this entire leg was not met, because then they'd have to go down here. I put it at the top of the pullback. That's not met. But if we're scalping around, maybe you go for a measure. Maybe you see the high of bar 50 and you short, and then now this establishes a new trading range. The low here to the high here. Maybe you short around 50, 51, or you take the 52, 53 short to the lows. The trading range low is bar 49 low. Then we have 3 bars here. I like this one, but I like this one, but I don't like how it's the bottom of the trading range. 3 bar breakout, put it at the high of the pullback. 1-to-1's met with 72. It leads to a rally. Now we're trading at the high of another trading range, right around the 59 low. Well, it'd be, I guess, the 75 high. And if you're really trading past bar 72, you could take this short back to the low here. Pretty cool day. Didn't get to trade much today. Looking forward to trading the rest of the week. Hope you guys learned something. If you learned something, share the show. Don't be a hoe. I got some cool stuff I'm working on. I've been programming with ChatGPT, so I'm going to get going on that tonight. And I'll talk to you guys in Discord. You guys have a good one. If you have any questions, please don't hesitate to ask. If you want to join the membership, hit the join button below. If not, hit the subscribe button. I'll talk to you guys tomorrow. Have a good one, everyone. Good night. Thank you.